very important message today from my trading warrior, Henrik Zeberg, who's the head macroeconomist at Swissblock. You could find Henrik on X under his name at Henrik Zeberg. My trading warrior brother, we've been doing this for a while, haven't we?
Oh yeah, you were one of
We've
the first who was so kind to bring me on. So thank you very much for that, Coach.
yeah, we've seen quite a few cycles. It's got to be about 8 years, so we've lived through a
Is that long?
lot,
Yeah.
haven't we?
Oh
A,
yeah.
a pandemic,
Yeah.
wars, everything, and here we are, um, making new highs in the S&Ps. Congratulations on your call. You've been bullish for a while. 6,100 was the count, and I've noticed that you're giving it a little bit more tolerance. Is that because the count has changed or that certain things have not completed yet, that is going to give you the go?
So the way I do this is by using Fibonacci extensions. And when you start out with the levels that we did back in 2022, you could actually see that there would be something around these levels. I think it's at 5,700 to 6,000 back then because that was a level. And it should be probably in the upper end of that. And then when you move in closer, you can see that that can be detailed a little more, and then you can see it's probably more like 6,100 to 6,300. So that is the area I've been sticking to for quite some time now, and I think that is where we're gonna end.
Okay, well, we've traded over 6,100. You want to change your mind and say that was it?
No, no, no,
Or
no, no, not yet, not
okay,
yet. I think there's a little more to it. I think there's going to be a, Christmas rally.
okay,
So I think there's a little more. So we'll stay, but most likely with beneath the 6,300. I think there is a chance we could kiss 6,400, but for now let me keep it to what I've said, 61 to 6,300. That is where in the range I think we should see the top.
okay.
And also why I posted that, just not so long ago, that we could actually see that top this month. I mean, I would
Yeah,
not be surprised to see that. Yeah.
yeah. I hear you gave it a 90% chance. The question I ask, and I know we're having a great day today, and also I think Nasdaq, you were looking for 22,000. We're only another day like this away from that 22,000 number, and it
Yeah, I
was
think I
actually
have
good.
23 between 23,500 24,000 actually. I think we can get all the way up there. So, but on
Wow.
Nasdaq, but yeah, but I think the we'll see probably then. So when I said the topping in the market is probably going to be the S&P and Dow Jones. For like what you're looking at right there. I mean, if you look at
Yeah.
your chart, what you have right there, Coach, you see your 1, 2, 3 that you got up there,
Yeah.
and then if you look down at your RSI, you
Yeah.
see
We're
that the
diverging.
tops on this, yeah, we're diverging exactly. And if we do that, when you do that on a weekly basis, that's when we need to start paying attention to what's going on. And even
Right.
more so, if you look where you have a two written and you take the top almost where you have a three written up there, you can see that it's actually kind of and then from the low we had in August, that is kind of shaping into a wedge there. So
Okay.
I would be, saying, yeah, from that point and then to the point where you said the not where you had the three written just into October there, the low there. So
Yeah.
you're starting to have what seems like a wedge, and I think that is into where you have a declining momentum or divergence.
Right.
And historically, if you go back and you see it also, and you can look at it also in 22, what you also have in chart there, you can see the same thing there. You had the exact same situation, only this time it's bigger. If you go back in 2007, you had exactly the same, exactly the chart that we look at on a weekly basis in 2007 and 2024 are so similar. It's scary. I mean,
So,
even with the spike lower in August that you
yeah,
see also in your chart here, we
right
also
here.
had that in August in 2007. No, 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 actually, yeah, that one, yes.
Yeah.
That we also had in 2007, where the subprime first came out. So
Interesting.
all these things here,
Okay.
the charts are simply, so alike that it's scary.
I believe that Elioticians would call this an ending diagonal, where I call it a 1, 2, 3 top. And
Yeah, yeah, yeah.
sometimes we get fractals on the
Mhm.
third top. You get three in the
Yeah,
third, and this looks
yeah.
like it was one of three, pulled back,
Mm,
two of three, and now we're in three of three. to get the
Mm.
3 drive to a top formation.
Yeah.
You also talk about that not everything has to top at the same time, and I caught your feed today, and you're saying that you believe the industrials have already peaked. They're doing the same thing. We've had 2 pretty negative weeks in a row.
Yeah.
So is this something that you would already be laying into to have shorts, or will you wait for the S&Ps to continue to rally and maybe we get a rally in XLI, but not to new highs, and that would be kind of a go signal like
Exactly. I
this?
would think like that because if you look at it there, I think there's a good chance we bounce off of the level you had right there. I don't
Yeah,
know if that's the
50,
green area there. We could 50.
50
Okay,
day.
yeah. So you
Yeah,
can, I think you can bounce off of that level there, but you also see your momentum down there. It's actually been moving down quite significantly in this move here. It's not, so it's kind of telling us that the move was even weaker. So I think there is a chance or risk or how you would put it that you get a like a shoulder, head, shoulder kind of pattern here because it is maybe the top we saw there earlier. Can I be wrong? We could see one more high, sure. But what I also look at, if you look at the XLK, which is the technology part of the S&P, you will actually
okay.
see that that seems like it has further room to run. So I think maybe it's the more in the more traditional businesses that we're now seeing topping out,
Yeah.
and then
The
you'll see the
real
technology sector
economy. The real
the,
economy.
the real economy, yeah, there'll probably be a lot of tech fans out there, not agreeing with that, but yeah. So the what real traditional economy could probably be topping out at this point, and then you'll have another couple of weeks for the S&P to rally a little more, driven mostly by tech stocks, and then you'll see the Nasdaq come in as the latest one, and probably yeah, that's why I said there will probably be something in January. I think Nasdaq and potentially also both our altcoins and Bitcoin topping around the same time with Nasdaq in January.
Okay, I want to talk to you about that, but I think this is also a similar example. I know that you think that AI is a bubble.
Yeah,
Okay,
yeah,
so here's
yeah,
NVIDIA. I mean, with the market roaring, Henrik,
yeah,
we're on the verge of taking out a little neckline here that would take it down to 112. If the
yeah.
market carries further, this is a shorting candidate to me because I think we could see initially here 116, but I think we could see 60 in NVIDIA.
Yeah,
Do you
but
think that?
I think I'm with you, absolutely with you there, and that's again eerie here. I mean, I think so. If you look at the top, actually, I don't think the top that we had here in November was actually the top. I think the
Okay,
top was the other one you had already in June,
July,
and the
yeah,
reason that July, I said, okay,
yeah,
that's
okay.
June, right? That June, yeah.
Oh, yeah, it is
So
June.
because
Okay,
yeah, so if you look at from there, you actually see you have a three-way move down from that point.
right.
And then the next move up here to me is actually a bounce only. So you have the first move up here is an A wave, a B wave, and then you have had a five-way move up to the top here, which means that this is actually a B wave bounce only. And
So
if you
this
look
is
at
an
it also,
irregular C from up
yeah,
here?
no,
Okay.
no, yeah, so you're gonna get potentially this can be an expanded flat or something like that, but it still means that the C wave that could now set in is going to be an extension level from your June high down to your August low, and then applied from that top up there,
Yeah,
and that would give you a very big
1.618. Yeah,
exactly that
1.618 takes it down there.
that takes us down there. Yeah. So I'm with you. I'm with you on that.
Okay.
So I think you're also putting a nice shoulder head shoulder there kind of, and you see the declining momentum as well. I'm all
Yeah.
with your technicals there. Absolutely. And I
Oh,
think you have the first when it breaks that one, and we know it always needs to retest that your neckline there around. And
yeah.
remember, it's never I know to tell you that, coach, but obviously the people that it's not around it's not the line exactly, it's the
Yeah.
area around that line. So when it touches up, and it's not like if it peaks up again it's like whoa, now it's all
Uh,
invalidated.
yeah.
But I think I think also momentum tells us that, and we see momentum is on the daily here is below 50, which is also not a good sign because that's normally where things are deteriorating or declining. So I'm yeah, your target, I
Okay.
take it in, I'm with you.
All right.
And that
So
speaks into the bubble that you talked about, the AI bubble, and especially for
yeah.
NVIDIA.
Yeah. So and you know what? Semiconductors have not made a new high through all of this strength in the
Oh really?
market.
Okay. All
So
right.
I don't know if you look, they peaked when you said NVIDIA peaked. So,
Okay.
and they let it up. Didn't they lead it up? I mean,
Yeah, they
NVIDIA
normally
was
do. They
NVIDIA was
yeah.
last year's Bitcoin,
Yeah. Exactly.
right?
So, but it would also make sense then that you see those actually topping out at the time of NVIDIA's, June top, and then when NVIDIA does this, extra hype high here, which is actually just a phony high, then you'll see the new decline, or a bigger decline. Yeah, okay, I see that.
There's a
Okay.
semis. So I mean,
Yeah, yeah.
they haven't been able to do it. All right,
And
so
when I talk
go ahead.
and you see the deterioration there. No, sorry, man. But you're talking
It's
about the
okay.
deterioration also in the RSI. So it's like
Yeah,
kind of, it's cannot really get up and into that area where we want it to be above 60, where it really rises fast. So
yeah.
it starts to roll over, and yeah, and that's why I think it's going to drop as well.
Okay. So we're not that far away. I mean, it could complete by the end of the month. You know that my wheelhouse is currencies. Okay, so I want to know because I believe from talking to you in the past that when the meltdown begins, when the decline begins, that the dollar is going to skyrocket.
Yeah.
So, okay, so I'm interested in, do you still think there's enough time for the dollar to break 100 anymore now that we're this close to a market top? I mean, I was bearish, but it's hard for me to get too bearish here. In fact, I think we're going to 109 or so, 110 in the Dixie. How does the Dixie fit into a meltdown in the market? How do you play the dollar?
So I can't. I mean, I also do it on the bigger picture there. So we need to see it in a much bigger picture, and a much bigger picture actually goes back all the way back to 2008. And in that movement, you will see how we are at and it's probably difficult to say, but that will show us that we are in a very long bull market. And that bull
Yeah,
market now has a final move up. The only thing is, I cannot see how we can actually have a low from the level of October here that we now show here. And now you're starting to get
yeah,
back there. Um, but from the top we had in 23 there. When was it? Yeah, there we go. So the move you have all the way back there from 2008, actually around the time when the money printing started out and all that, and
yeah.
everybody said, "Oh, that's bad for the dollar." We actually saw it's not bad for the dollar. So you've been in a long time bull market on the dollar here ever since on the Dixie, and everybody has so busy actually, disregard or counting it out, the dollar. But I actually think that the strong move in the dollar is going to come up to the level we saw in 2001 here. So it's going to bring the Dixie up to 122. But I still, as your question was, I think there is a first phase here. And if you look back on the daily chart you will actually see there's a negative divergence also on
Yeah.
your daily chart. And you have now a first leg down, you have a second, and I think we're going to see the third, the fourth, and the fifth. But very quickly, just like we saw with the move that we had back in, oh, I can't remember when it was, from I think it was from top in 22 down to the low in 23. So
Okay.
a very steep decline into this. What is going to offset that? I'm not really sure. It can be something that happens in central banks or something. Sometimes when we see that counterintuitive move here, because the dollar is actually I mean, the dollar is in shortage here around the world. I just think it's what is going to take people off the onto the wrong side of the fence of the trade, and then you'll see it actually turn again. So I still
Okay.
say 97, 98 on the dollar on the Dixie
Okay.
before we get that monster run into
Okay.
22. Sorry,
Okay. So,
25, obviously
all right. So
25.
then okay. So we're still going to take out par. It could be like a false breakdown to 95, and then next time back over
Yeah,
par. It'll begin.
yeah,
And won't that keep a lot of people wrong-footed? Because with a break in the dollar, they're going to apply and believe it's going to be risk on, and they're
yeah.
going to see for the first time in many years that capital flows out of the US, that we could have a decline in equities and a decline in the dollar simultaneously for a while.
It depends on how fast it actually goes, because if you look at how fast some of these declines actually move, I think we can be a completely different place by in 4 to 5 to 6 weeks. So
Okay.
I think it's something that can happen really quick. And I think we are potentially today around the turning point of that small bounce you see here that we have right now. And that
Okay.
bounce can then lead us to the a third and extended wave, which actually more or less in a complete move could take us down to the 100 line. So
Okay.
I think there is again, it's always difficult to discuss these things because it's based on the theory. But again, I also notice, as you can also see, if you look at the negative divergence you have on the daily there from the top and
Yeah.
down to these and to the levels, that also gives us that it was quite significant. It moved up even though momentum was not really with it.
Yeah.
So I mean, that the decline there down to these levels should be like really fast actually. So
Okay. All right.
so I
So
think
then,
there is this one.
okay. All right. So then, if we get a break in euro back under these lows, the dollar rallies one more time, you'd be looking to buy euro. What would be your favorite fiat to be long during a dollar
Um,
decline?
oh,
Aussie?
this would be this is short. I mean, this is short time. Oh, what would be my dollar fiat? Not even sure I can say that. I would speculate. I don't know. Actually, that would be a guess at this point. I probably would be
Okay.
Swiss franc, but I would be guessing at this point.
Okay. Um, so now I want to move over to the precious metals.
Yeah.
And we're rallying here. Silver has really been underperforming. What do you do with the metals here? I know that long term you're bearish. So do you think the metals peak out around the same time or already have peaked out? And would you ride shorts in metals during this time period?
Now, there's not 100% correlation between the strong or weak dollar versus gold and silver. It's not a, it's not a perfect correlation at all. Actually, you can both have rising gold and dollar at the same time. So, and
Rarely
yeah, I
silver
would say,
though.
okay,
Rarely silver.
right.
I think if you go back historically that, and maybe that's a reason why silver so far is underperforming a bit, is silver needs a bear market in the dollar. So when we get that bear
Yeah.
market in the dollar, that's when silver, I think, really goes.
And then if you then see 122, I mean, if the down to the bear, I mean,
Yeah,
97, 98 is not really a big thing, especially if it happens really quick.
yeah.
And I think the thing that I'm seeing is the 122 on the Dixie going into, let's say, Q3 of 25 in a
Wow.
deflationary bust.
Yeah.
I think you will see that silver will not perform well and gold as well. So
Okay.
I still think there's gonna. I mean, and honestly, I mean, I will own the thing that I saw a long time ago. Gold should have been going down. I own that 100%. But if we look at it, we look at platinum, we look at silver, we look at gold miners, even gold miners, which are related to gold. We will actually see that those three assets have actually performed exactly as I expected, not making new highs, staying low, and
Yeah.
now
Yeah.
potentially dropping even further. So
Yeah.
I think that it's simply gold that has been spoken up. A lot of people have been saying, "Oh, we get inflation, we need to protect ourselves and all that," and that's why gold has been moving up. But really into that, with a top in the stock market and a dollar soaring into 220, I don't think gold and silver will do well there.
Yeah. And the miners, Henrik, I don't know if you think this could be true, but most people haven't made money in the miners. They probably got in late. They didn't buy them in March. Everyone hated them, so there could be some pretty good tax loss selling the next few weeks too.
Yeah,
Um,
yeah,
yeah. Let's move over to bonds. They put in a pretty nice, actually left a gap up here on the appointment of the new Treasury Secretary. Are the
yeah.
bonds kind of like the XLI and like NVIDIA, which is acting kind of shitty? Is this uh, kind of a precursor or foreshadowing? Because I think you would expect a pretty good bull move in bonds when risk off begins to set in.
Yeah, there are many ways we can look at this. So I think actually the first move out of this came from the low we had there in October of 23. We saw the first move up
Okay.
there.
Yeah.
And
Right.
we've then been going through there into this bottom we had here in November of this year
Yeah.
is actually a ABC structure to me.
Okay.
It's a running flat. It's a running flat down to this bottom there. Yeah, the bottom
Oh,
we had there. Yeah.
okay.
So down to that point, from what we saw, the highs we had in just going into 24, yeah, even further back. So all the way over there.
Okay. All right.
I
So,
think that is the yeah. So this top here, the top that you had there, is the first. That's the first move higher. That's the first leg up. Then you have had an A wave down, a B wave up, and then a C wave down to this. This is a running flat to me, as I see it, which means that this is a very, very bullish setup. So in it's a second wave in a or B wave, depends. Actually, I think it's a B wave. That doesn't matter. So, but it should then set us off for that next leg higher. And the best way to estimate how far that can go is by measuring this distance from the bottom we had in 23 up to the top in early 24, and then do the extension there. So this distance there, from that one down to the bottom there,
yeah. So give you
actually, yeah,
about
so all the way from
109.
no, you go all the way from 80, what is it, 79 down the bottom in October 2023. So all the way down there.
Okay.
If you the bottom there, the lowest point we have in the chart right now,
Right there. Right there.
down there, yeah.
Yeah.
Then you've measured that first leg up that went into right there.
Yeah.
That hundred, that's the 100%, and then you measure that from the bottom we had here in November of this year, because
Okay.
then you'll get the extension on the next wave up higher,
Okay. Because it's
and
like a
that would
it's a money wave. It's like a 3 or a C. You get an
yeah.
extension, right?
Yeah, so you get the
1.618
extension higher there. Yeah.
of
And
this one.
that will move. Yeah, exactly.
Okay. That's going to be 120 bonds.
Yeah,
120
exactly.
TLT.
Exactly. And that's what we're gonna get. I mean, I think, when you see a deflationary bust develop and you see, we've been waiting for the bonds really to start telling us that now it's the yields are going to drop. And I think this is it. We had the beginning of it in 23. Now we've been waiting for some time. It took a long time, but the longer, the stronger. And that means that the
I
longer
like
we have
that.
seen this consolidation in the second phase, I think the stronger we're going to see the move up higher. So I think you're going to see, I mean, treasuries here, bonds, and so on. And that goes pretty much against what Druckenmiller and whoever have been coming out and saying, you got to short bonds at this point.
Yeah.
I think it's wrong because
Okay.
not now. I mean, I think I can see what they're talking about in the long-term perspective. But in the short-term perspective, which for me will be the next 6 months, I think it'll be a very bad idea. So I
Okay.
think it's
Because
after that. I mean,
okay. Because this whole thing could
yeah,
be a 4. Is that what you're saying? This spot from here, that this could be, this ended 3 down, 5 of 3, and now we're in a wave 4 corrective wave, and we could, 120 was the breakdown, but this would end 4, and then bonds
no,
collapse.
I actually think it's a little different. I think we have a that we see that this is going to be a how do I put this? I think it's an A B wave, and then you have a C wave going higher, and that C wave could not only take us to 120. I think chances are it could take us even all the way up to 142.
Wow. Okay.
Yeah, because
That's
you're gonna.
huge.
I mean, again, if you look into 2020, for instance, you see that right now yields are so high. We have this. But if this we get a slowdown in the economy, then you'll see inflation is starting to roll over, and when inflation rolls over, you'll see yield starts to drop fast, and we are, as I see it, in a phase where this is very very close to happening. So in that momentum, what you see here, there is, as you can also see with your Fibonacci's there and the retracement levels, there is
Yep.
something about 130, but there's also
Yeah.
the one thing, something about 142, and I think
Yeah.
actually the 142 is where we could get to.
I think this goes back to the all-time high. So the big bear market, I don't
Yeah,
know,
yeah,
170 or
yeah,
something like that.
yeah,
Um, I wanted to ask you, I know that your targets are still higher in Bitcoin, and I
yeah,
know you've made them public.
yes,
And I was in an interview, and someone was asking me about um, the most leveraged Bitcoin play in the world, right?
mhm,
MicroStrategy.
yeah,
And, and we had that big outside day, I don't know, a week or so ago. And
yeah,
what I said was, I wouldn't short it was like this day. I said
Yeah.
I would wait for Bitcoin to make a new high. And
Yeah.
let's say we get to your targets. All right. We get
Hmm.
to, what was it, 116, 126
I
in
have
that
one.
region?
I actually have to extend it just a little bit. So I'll say I've said 115 to 123 is what I've said public. I probably have to say that I'll be taking the lower range, and it's probably maybe even spiking to 120, 28 or something like that. That's where I have a
Oh,
Fibonacci level at this
all
point now.
right.
But
All right.
again,
So
like
if
what I did in the, yeah, sorry.
no, that's okay. So yeah, you have to adjust. You assess as markets go on and
Mm,
adjust targets.
mm,
My question is this: if we get to your targets in Bitcoin, Henrik,
yeah,
and all we get is a fib retracement, we don't get new
yeah.
highs, even though it was a
Mm,
confirmed high. We don't get new
mm,
highs in MicroStrategy. Wouldn't that be a
mm.
nice short instead of shorting Bitcoin, something that's not making a new high compared to Bitcoin making a new high?
Yeah, if it doesn't make it depends on whether it's going to make a new high or not making a new high. I think so. I could actually see, and also again, if you look at it, very often you'll see into some highs like this
Yeah,
that you get sort of a, a negative divergence on it. We don't
yeah.
really have that now.
We
So
don't.
I'm spec no. So I'm actually speculating whether we're going to see just a new high, and especially if Bitcoin is going to make something into 128. I find it difficult to see MicroStrategy not making a new high,
Okay.
and I could actually see it, pushing up a lot because the next fib level I got is is like I can't even remember it, but I think it can be
700.
a lot higher. Yeah,
Okay.
I can't
All right.
remember.
So this will be
So
interesting to
so I think
watch.
I think I'll probably wait until we see the highs in Bitcoin, and I don't they're not there as I see it, and then I will look at that because I also if you look at it historically, you'll see that MicroStrategy and Bitcoin have been correlating very well. So this about having something that is a month or something in between from one top to the other, I would find very
Okay.
difficult to see. So
Okay.
I would speculate that probably see a new high, but with a lower RSI, and then you get
Okay.
the divergence,
Then you
and then
go
there could
for it.
be an even better point to short at that point.
All right. I'm glad I brought it up. I also want to bring up what most people have the majority of their assets in. And we've been hearing about housing shortages in the US for years now, since COVID. And we've had a bubble in real estate that actually took out the '08 highs of the bubble. I thought we'd have an echo. I didn't think that we would have
Mm.
really surpassed the mania in '08. We did by a long shot. But now
Oh,
inventory
yeah.
is starting to show up on the market. And I look at things like DH Horton, some of these housing stocks, and they've already peaked the way it
Mm.
looks to me.
Oh
Are
yeah,
you bearish? I mean, you have to be, if you're bearish liquid assets, like anything you could just flick your mouse. You must be
mm.
even more bearish something that needs credit to get done. What do you think of housing
100%.
here?
100%. Yeah, absolutely. I haven't looked at these, but that's a great idea actually to look at some of these companies. But I would think, I mean, obviously, also you look at some of the on finished houses that are just waiting to be
Yeah,
put to be sold. I mean,
yeah,
these levels are just spiking now, and we're seeing levels that we saw in 2008 as well, or seven.
yeah.
So
Another piece.
again,
Yeah,
sorry.
another piece falling into place.
Exactly. And another piece falling into place, and the home affordability, we know that that's in the gutter. I mean, people they can't afford being their homes. So, and this is what I discussed with everybody. So when I was talking, even also to some hedge funds yesterday, and I was their macroeconomists saying, yeah, why do you think things are so bad? I said, well, because I'm not even in the US, but I can read the numbers and I can see what's happening with the housing market and how people that cannot afford in being their homes and the delinquency rates and credit cards and mortgages and all these things which we have seen before. So that's
Right.
another piece. And yeah, absolutely, I could see some of these corporations, and this one looks very topish to me. I did very,
Yeah,
very topish to me. I think the top is in there, as you say, but
yeah.
can always have a second wave. But yes, I think this is top as well, 100%.
Well, then, I'll put in a CIC stop, cancel if close. When it
Yeah,
gets close
yeah.
to my stop, I better cancel it quick before they take me out of the trade. Um, Anything else top of mind that you want to cover? I mean, we've gone through the board, and you've crystallized some things for me. Um, are you watching foreign markets, which have also become parabolic, like the DAX? Or I know you pay attention to the Nifty. Any global markets that have your attention here that have already
Yeah, I
peaked?
think one of the things that I'm paying a lot of attention to is that, back in 2007, we saw this panic in August, and that was really the first
Yeah,
time we saw subprime coming out. This time, we saw it was the Japanese situation that brought about this, panic in August. So
right.
I'm actually thinking there's something ongoing in Japan, and we had, on a daily basis, we saw some of these financial institutions down 25%, and then like overnight everything was fine. I
Yeah.
don't think it is. I
So
don't
you,
think it is. I
all right.
think
So
there's something really bad.
we could have unwind of the yen carry 2.0 starting
Oh
on
yeah,
this failing rally here, because I think this is a
yes,
failing rally.
yeah. No, I see same. I think we're gonna see that the first of all, you're gonna see the Japanese yen is going to drop again, and I think we have I have a next leg lower there also, which means the dollar is going to weaken, as we talked about also.
Right.
So I think the dollar is going to weaken first, very swiftly, and then I think you're gonna see a new leg up in the dollar versus the yen into that deflationary period. And I have a lot higher targets also there on the dollar yen. So there's a
Okay.
next leg down, and then we see a very very strong push in the dollar versus the yen.
Okay. I'm thinking we could actually do 120 before your
Um,
scenario. No?
maybe yeah. I don't know what there is some. I think maybe 130. I mean, there's
Okay. Back
yeah, around
back
that.
here.
You have some support there, right? You have
Yeah.
quite good
And
support there. Yeah.
and 35, because I'm thinking that this, just a measured move under 140
Yeah.
is,
Yeah.
would give you 120, but they
Yeah.
sometimes they
But
don't.
but I think this one is cheating us a bit because I think actually this is the move that we have higher actually starts at the little pin or the little wick that you have going down there. So if
Right.
you yeah, so the one that you have there on if you're not at the bottom of it, but no further to the left. Not that far, not that far. Not far. There's a little pin there, just right there. Yeah,
Yeah.
this one.
Yeah. Yeah.
And then I think it moves up in an A, B, and then a C wave. So you actually have like that. So the first decline down is down to that point. It bounces
Okay.
back up in an A wave, a B wave, and then a C wave up to that level where you have the top. And now we're going to see that final C wave lower, which then will take. That also will bring your target up to around 130 instead of higher. So I think it'll be a retest of the what is probably your 200 daily moving average coming up there, the red line. It's
Yeah.
going to push down to that point as I see it, and that's around that level. I think we could see the bottom before we then get into the deflationary period.
Yeah. So this could be ABC down to here, and then we
Yes,
blow off to
yes,
the upside.
and we blow off because there's a much bigger pattern that supports also the Dixie pattern I talked about, where we see actually the dollar also versus yen can bring us to much higher level. If you go out on a very long time basis, I can't remember what the levels is, but if you go back in the uh I can into early 2000 2000 sorry year 2000, around that time, I think we'll see that there is a top that could support it around that. Let's see, because it's been dropping for so many years. So what we're seeing now is basically just and you actually
Okay.
also have potentially a rising, expanding diagonal on this, the final part here.
Okay.
So okay,
So we
so
could make one more. Yeah, we could make another high after this
I
pullback.
think we will. I think we'll be making a very very strong high actually,
Okay.
and that will be the very definition of the coming deflationary crisis. The dollar will be so strong it will crush everything and anybody around the world.
Okay. I think we've covered a lot of things. Anything else that's on your mind? Because I just have one more. Go ahead.
Okay, I don't think I have so much. I mean, I don't, but that's more about the macroeconomic side. I don't trust the NFP numbers too much, but but that's not directly in the markets. But I think we had the NFP numbers last week, and looking at those and looking at some of the numbers coming out from the household survey compared to the establishment survey, and I mean, it's so funny that nobody really looks, and also with the unemployment rate actually moving up, even though participation rate moved down, and if you compare the numbers, I mean, that is weird. That is something really fishy going on there. So that was interesting, but that's outside the market here a little.
Okay. And also, One of my friends who trades at, you have buddies that you talk to every day, for years. And he said, Dale, all you have to do is listen to what the administration wants with the dollar,
Mm,
and they
mm,
normally get it. And it
mm.
ties in with what you're saying that the Trump administration wants a weaker dollar. So maybe
Yeah.
that's how, into the first,
Mhm.
into January we peak and then head
Yeah.
down hard. Um, and then the most important thing is I want to hear about this birthday bash in Copenhagen in March. And where's my
Let's
invitation,
see.
man? Huh?
Now then, oh, it's all invitation, right? I mean, let's do it. I mean,
Oh,
if things are working out fine, it's not like I can have all the 1,000 or 170,000 followers in here. So I think we'll
no.
be I think let's see what we can do. I mean, if there's really something about it, then why not? Let's see if we can establish that.
All right. And where were your birthday is when? It's near the equinox in March, right?
It's yeah, correct. 20th of March, yeah.
Oh my
So
gosh,
50th,
yeah,
50th.
that's right there. 50. That's a good one, buddy.
Yeah,
So where
big
will
big
the
big round number.
S&P where will S&Ps be on your birthday? Just a guess.
Yeah, give me a sec.
And light the candle and make a wish.
3,600.
Okay. 3,600,
That's low.
Henrik Seeberg. That's going to be testing the major lows from 22.
Yes,
You heard
correct.
it here first. So this is how Henrik is going to be celebrating his birthday. That's about a 40% decline, and that means that we're going to.
It's probably a little too low. So let's make. Can I just change that?
Oh, you can. How about
Let's say
4,900?
let's 4,400, and
Oh,
it'll be quite a drop right there. Yeah,
all right.
something like
Well,
that.
it's your birthday, so you get a mulligan.
That's my
Okay,
birthday. Yeah, that
that's
was my second
and
wish. Second wish. Thank
all
you.
right, Henrik. Thanks so
Good.
much for your time and over the years. I've had my
Likewise.
head turned by things that you do. I appreciate the support you give me and
Right.
TradeGate Hub, and I'm a big fan and think that this is going to be a year for the books, and look forward to
So,
keeping in touch with you through the whole drama.
oh yeah, thank you very much, Dale, and likewise, it's been a pleasure to talk to you and work with you like that. So thank you.
All right, Henrik Zeberg, everybody. This is recorded. You'll be able to watch it again. And remember, don't just count your pips, count your blessings. Get ready for 2025. And Henrik's a guy that you need to be paying attention to into this time window. And that's a wrap for me. Thank you, my trading warrior brother.
Thank you.
Adios. Henrik Zeberg, everybody.